All right, one more. That's the biggest of all, the semiconductor shortage. Total horror show, right? How have the basic semis been doing? Micron's cascading lower. Meanwhile, you listen to the semiconductor capital equipment makers, as I did on their comm calls. Sure doesn't sound like the shortage is going to last forever. Neither Lam Research nor ASML gave you a sense that business is on fire. I was surprised at that. In fact, Lam embraced the midpoint of pretty much every range of estimates. I was hoping to come to you and tell you to buy that one. So when you hear people predicting that the chip shortage should last well into 2023, ask yourselves, then why the chip makers aren't buying new equipment like crazy to take advantage of that? I get the feeling that there's been a lot of double ordering in the system all the way down the food chain. And that's why the capital expenditures aren't going off the charts. The industry seems to expect that there's a surfeit of semiconductors coming all over the place, not just in the cheapest commodity chips like DRAMs or flash. Those are Micron's bailiwick. Yet the price increases are either becoming baked in or they're not coming through at all. So again, like I did with, because I'm trying to always teach here. Like I said with Dow, commodity going into PPG, let's look at it another way. Look at through Ford Motor. Now, you might be wondering, how could Ford Motor see its stock rally 3% today, only $2 from where it was 10 years ago, even though it's a huge buyer of all the commodities I mentioned and totally hostage to the chip shortage? I think the rally in Ford stock says the tyranny of the supply chain may be coming to an end, even as I told members of the investment club to be careful because it's been up big on 2 straight days. All that said, there's one inflationary item I don't have an answer for, and that's the labor shortage. We're beginning to see more people return to the workforce with these vaccine requirements, but the profound loss of 700,000 people in our great country, coupled with the victims of long COVID and the remaining unvaccinated, give you plenty of reasons not to go back to office. Fear. Fear. At the same time, there's this widespread reassessment of life itself. You know what? I'm willing to get existential. You know why? Because we had the same thing happen after the Civil War, after World War I and World War II, where we had major labor shortages and a lot of plain old partying. It's happening again as the war on COVID winds down. People are trying to figure out what to do with their lives. They will figure it out, and when they do, I think things will end fine, the way they did in the 1950s. Of course, not all deflation is good deflation. Look at Snap, down more than 20% in after-hours trading because Apple's new privacy rules make their targeted advertising a lot less precise, therefore less valuable. You want deflation? And talk to the owners of Snap. However, with the exception of labor, there are suddenly a lot of bullish pieces in the inflation puzzle that I see that I want you to see. If you wait for these prices to finally come down, if you wait for the jigsaw puzzle to be completely finished, you'll end up waiting too long. Let me give you the bottom line. Jumping the gun is a mistake in almost every single human endeavor, except for the stock market. The averages have been gun jumping on peak inflation for the last 10 days. Because the big guys cannot afford to wait to get in. Soon, neither can you.
Don't miss a second of Mad Money. Follow @Jim Cramer on Twitter. Have a question? Tweet Cramer. #MadTweets. Send Jim an email to madmoney@cnbc.com or give us a call at 1-800-743-CNBC. Miss something? Head to madmoney.cnbc.com.